Hello and good day, everybody. JJ Edwards here with another episode. We're looking at NASDAQ 5 minutes charts. First and foremost, as always, we mark the lows and the highs. Now let's go to 1 minute chart. We can see we are having a bullish run from this pivot low to this pivot high. I would like to see where is the point of control and the highest volume here at $508. Also on the right side, we have the daily volume profile indicating at the same price range. There is one low in here, most equal lows. Now for continuation, I would like to see if this point of control can hold. We already have a tail that shows passive buyers. On the other hand side, we have a massive selling shown in the CVD, cumulative volume delta. CVD made a new low. The price did not make a new low yet. That shows we have passive buyers presenting themselves at the point of control. Therefore, a continuation could be in the horizon. I have two bearish candles and a gap in here. I would like to measure them. Half of this range comes at $514. Therefore, if the price closes above half with a strong bullish candle, not much of wicks at the highs, I can start going long and target at least $545, which is the other high. So in this case, we shall wait and see how the price reacts to the point of control of the day and the point of control of this range. We have a bullish candle, but CVD or cumulative volume delta is a red candle. That means the sellers on this candle has been absorbed. That's a sign. Now we have aggression in the market. That's good. We have a close above half of this range. Now I can leave one pending order at the mean threshold or half of this box. Once this order is active, I can move my stop lower, knowing the point of control of the day and the point of control of this day range can provide support to my entry. Now I'm moving a stop here, risking $500. Since the volume is very thick at the lower portion of this range, the probability of NASDAQ making a new high is increasing. CVD is showing with low effort, price is going higher. That low effort means we have passive buyers at the lower half of this range. Now we have three bullish candles. If the price respects half of this range, I can be optimistic that this uptick in momentum can resume with a bigger force and even go higher. In that case, if it respects half, I will move my partial even higher. This is good enough. Now I am optimistic the price can go higher and take the partial, which I left at $545. I would like to move the stop below the tail of this bearish candle, securing $240. We have a bullish breakout. That bullish breakout left one fair value gap. At least this one fair value gap should remain open, and this candle should not touch the high of this candle. The first partial is done. This portion of the chart should remain open to have a continuation. If I see this candle is closing below this, tail is okay, but I don't want to see it close below this fair value gap. If it does, then I would like to close this trade. If it doesn't, the uptrend can potentially continue. Point of control is right at the middle. If you don't have volume profile, you can use the same range technique to check where should the price react and where should you expect a reversal simply by measuring half of these legs. I have moved the profit to higher level because the price is beautifully respecting this bearish candle and having a bounce. the market is very bullish. On the other hand, CVD or cumulative volume delta is completely synced with the price. No manipulation whatsoever. This is a healthy uptrend. When CVD and price are synced and both making same highs and lows, that indicates we are in a healthy market and manipulation is not involved. This wick has respected the high of this bear trap. If this is a bear trap, we know that the price shall not go half. On this candle, it respected the high of this down close candle, meaning the uptrend can also go beyond $575. Now I can move the stop even higher below this tail, secure $855, almost to our target. I understand that this can be overwhelming, but if you stick to this course, trust me, at the end, you will have a full understanding of price action and how to utilize it with volume profile. Because this is a live market, I'm not cherry picking, I'm not using market replay. There's a difference in that. And the difference is we get to trade in different environment and be ready for different scenarios. Almost to the target. Well, there you go. We still own it. I hope you liked this episode. If you have any questions in any part of these advanced order flow and price action trading course is complicated for you, please write in the comment. I will get to it and I will explain that in the next or upcoming episodes. Until next one, stay safe, stay observant, and always protect your capital with stop loss.